Ali Patterson. On this episode of Fintech Finance, we take a closer look at GDPR and security. We head over to Ireland to speak with AIB. Back in the UK, we catch up with Clearswift, and then we head off to Belgium to speak with our friends from the European Banking Federation. So firstly, I caught up with Dr. Guy Bunker from Clearswift to talk around what GDPR means for banks on a macro level.
So GDPR is another regulation, and it's an evolution of existing regulations, and actually banks have been fairly heavily regulated for a very long time globally. So what does it mean initially? Well, actually it's not about necessarily a change in technology, but what it will mean is a fairly large change in policy and process. GDPR introduces a number of different processes that they need to comply with, so things like right to be forgotten or data portability, but data portability is one that banks have actually been used to. The key thing for them is, though, is the scope that the new regulation covers. So it covers a global area. Although we talk about the EU and EU citizens for GDPR, if they have operations outside of the EU, then they can still be fined if they use EU citizens, and the fine now extends beyond the region in which the breach occurred. So that's going to make a really big difference to them moving forwards. New technology is going to be needed, but it's new technology to back up the new processes and the policies to protect and assure the people that the information is being protected. And by people, I mean not just the employees, but also obviously the clients and perhaps partners and people like that. The whole way in which organisations deal with the data and the scope of responsibility under the new GDPR regulations is increasing. So they need to look out not just for data that's going outside their organisation, but also for the data that's coming into their organisation, as they will have a duty of care around that as well. I guess the worst case is really the fine that they can get. So 4% or up to 4% of global turnover, or 20 million euros, whichever the greater, which for a lot of banks could be a company changing event. So if you get fined 4% of your global turnover, but you only have a 2% margin, then that is a massive amount of money. And whilst I very much doubt we'll see banks disappear overnight, change of ownership is very much potentially on the cards when that occurs, because the lack of trust which will happen within the client base, the lack of trust within all their providers that they have. No organisations these days work on their own. Their organisations are part of a very big information supply chain that's coming in. And so if you start to be known as somebody who doesn't look after data, then at that point, your business is going to suffer from it. And it's not something which will recover quickly overnight. The internet means that you can change your provider for banks or general utility providers with just a click of the button. So if there is a problem and you do end up on the front page, then customers can readily change to somebody else. So I think this is going to actually be one of the big challenges that banks have. So for what I call the big traditional banks, you can't just scrap the legacy hardware. It will be an evolution that they need to go through. For the new upstart banks and financial services who can start from really a blank sheet of paper, and they can put in security, the digital security that they need from the outset, it'll make their lives much easier to do, whereas for the legacy one. So I don't think we'll see a huge upset. I don't think we'll see a refresh. I think we will see an evolution of IT. As I said, the regulation when it comes in has a lot of different requirements, and some of them, if you're a new bank who's got very few branches or no branches, actually some of the risks are significantly less than those organisations which have got high street branches. When you start to look at the information, banks tend to think about what they have in their databases, and the security around those databases is very high because they've been regulated for a long time. However, from our perspective, it's not just about the information in the databases, it's what happens to the reports which are run on those databases that then people have on their laptops. What happens to those reports which are then shared with credit scoring companies or all these other places which have interest in financial results. What happens to when you're looking for a mortgage and the mortgage provider comes to the bank to find out how much you're being earned, and there's a letter that's written. All of that information then has to be tracked and traced and managed, because when the regulation comes in, understanding where all the instances, all the pieces of information are, is absolutely critical. It's not just about that piece which is in the database.
Over in Belgium, I caught up with Pascale-Marie Brien from the European Banking Federation to talk a little bit around the relationship between the fintechs and the banks.
I think it will have a massive effect outside of Europe, where we are still relying on correspondent banking. If I don't have a relationship with you, but I want to send the money to another person, the process is extremely complex. So the blockchain technology assures me that you are you, that the other person is the other person, and to be able to transfer the money in a much more secure and quick way. Bitcoin is another thing. It's a product deriving from DLT. Not everybody trusts Bitcoin due to these historic hiccups. Yeah. So people can use Bitcoin, not use Bitcoin, but the technology is very promising to settle and clear payments outside of Europe in a global way, because Europe is very advanced in terms of managing cross-border payments, but the rest of the world isn't. So,
do you think it will have much of an effect on Europe at all?
On payments, probably not, given that the scale and the pace with which payments are made. The DLT technology would not be able to answer the needs of instant payment. There are thousands of payments made every second. The DLT technology, as it stands today, cannot support this. I think one transaction takes 3 seconds. It's impossible to settle and clear payments through DLT, but maybe the technology evolve, and maybe it will be possible in the future. We don't know that yet.
What do you think GDPR is going to really sort of do for the industry?
To tell you the truth, banks are used to be compliant. This is in their DNA, so they will be compliant with the GDPR. But the GDPR may create unlevel playing fields with the Google, Apple, the GAFAs of this world. But we're talking about financial data, so I think it's important that the customer decides who has access to his or her data. And this customer empowerment is the major benefit of the GDPR. I decide who has access to my data. I decide whether I want to see my data transferred to another provider, data portability. It's a complex issue. I don't know any DPO who's comfortable with the GDPR and understanding all the fine details of the GDPR, but I'm sure if we make sure that the GAFAs don't have an easier life in Europe when it comes to data than other actors of the market, then we're okay.
I was curious about what this vast amount of data meant for banks from a revenue and a security perspective. So over in Ireland, I put this to Fergal Coburn from AIB to talk a little bit more around what this means for them.
So obviously from a data protection point of view, it's the consumer's permission that's required. So we know that GDPR coming in next year is going to provide great structure and regime and really empower the consumer in that data. So fundamentally, in the hotel example I gave you, that's anonymized data. So there's no customer, there's no personally identifiable customer in that information. That's analysis, that's analytics running on top of anonymized data to give really powerful messaging to support business in driving their business. So GDPR obviously will put great structure and regime, and there's significant work for banks to do to comply with all the requirements of GDPR, but it's going to be back into the hands of the consumer to give us permission on the data that we need. So when we look at, coming from the digital payments perspective in the AIB, I look at PSD2 and GDPR through the one lens. There's great overlaps and cross. So obviously with PSD2, we're opening up the bank's payments and account information services to third parties with the permission of the consumer. And we look at GDPR and the overlap of that, the types of information we're sharing, the controls and obligations we have to the consumer for protecting their data. And we look at how, there's very aggressive dates for these, so PSD2 January next year, GDPR May next year. It's a very tight timeline for us to comply. So I talk to a lot of peer banks. who are very focused on the comply-only space. So because of the work involved and the legacy infrastructure that has to be brought to compliance, so that's obviously a primary focus for AIB. But we're also taking the time now, with some of the analytics use cases I've spoken to you about, to explore the opportunities that it presents. So I suppose you're going to have two cohorts of banks, the cohorts of banks who are firmly in the comply-only space, potentially becoming commodity providers of banking services, and then the banks who play in both spaces but see great opportunity in the value add that both GDPR gives with the consumer's permission and the PSD2 technically enables across the industry.
When it comes to compliance, new rules and regulations are constantly being brought in. So it's very important that you remain flexible and agile enough to effectively be future-proofed. I wanted to know how fintechs and technology firms will be able to enable banks to be agile and flexible enough for future regulations.
One of the things that we pride ourselves with is flexibility of policy. And so the policy around GDPR is around protecting personal information and credit card information. But we've seen in the US that the SEC regulations have moved on from just what we would call GDPR information and personal information out to intellectual property as well. So we can expect to see, it won't necessarily be GDPR, but something equivalent coming in across the EU, which will be around protecting intellectual property. So the same solution that we have that can dissect documents looking for GDPR information can also be used to look for intellectual property as well. And it's really important for organisations to understand that GDPR is just an evolution of the existing data protection regulations. We have other regulations coming in around the world, so for example My Number in Japan, which are going to have very similar protect information requirements in there. So as long as you have a generic solution which can understand and collect any pieces of information and distinguish between them, then that's where the solution comes in. Our solution is also about not just understanding the content, but also the context of the way in which communication happens. So email, for example, is one context, but today in the world of collaboration, it might be you're also uploading it through to a collaboration website in the cloud. It might be that you're copying it onto a USB stick. There are lots of ways in which people want to work and collaborate. So we understand the content and then the context, and the action that we can take is different. So perhaps actually we'll take the same document, I'm going to send it through email, it's going to somewhere where I trust, but I'm going to encrypt it because that increases the requirements. Perhaps I want to upload that, and that same document needs to be uploaded to a collaboration site, but actually on that particular one, we're going to redact out the information. Perhaps it's you don't need to know the account numbers, but you do need to know the addresses because the person on the other end is authorized to know the addresses, but not the account numbers. And perhaps it's something where actually, so same document, I want to copy it onto a USB stick. Actually, I'm going to block that because that's not secure. So flexibility is not just about understanding the content, it's also about understanding the context. And that's really crucial moving forwards.
In the last 5 years, regulation has been a boost to innovation and security. I take PSD2 as an example. Thanks to PSD2, incumbent third-party providers will be regulated, so they won't be able to access customers' accounts in an unregulated way. So it's an excellent opportunity for both existing fintechs and new fintechs to get into this market in a regulated and secure environment. And this is what we need. We need to have like a secure highway on which everybody can run and offer and compete. And I know most people don't believe me, but I'm sure customers may decide to switch bank because their banking interface is more fun in another bank because their husband or their best friend talks to them about their banking interface or their mobile application to pay, and they may switch banks. So it is becoming essential for banks to be creative and innovative and to be ahead of competition. But regulation provides a secure environment, and this is most of one call.
So we've learned, I suppose, in the last 2 years, AIB has done a big investment into its data warehouse technology to make sure we have a complete data set. We collect more data at our customers. We've collected more data in the last 6 months than we've done in the previous 15 years. So really we have this rich data set of every touch point and interaction we have with our consumers. Payments, naturally, is the high frequency data type we get from that.
Finally, I wanted to hear a bit more around the effect that GDPR is going to have on the ecosystem, and what this also means from an API standpoint.
Anybody who deals with EU citizen data, whether they're in Japan, Australia, the US, or of course in Europe. On the sort of slightly longer version, obviously governments and government departments, because they hold a lot of citizen data today which need to be protected. So anybody who holds that information is there. I think we'll see a large uptake and requirement within the retail world, because obviously they do a lot of credit card transactions, but they are also heavily into being able to market information out. So for them, things like consent and withdrawing consent, right to be forgotten, all those sort of issues are going to come to the floor for very quickly, and they will need to have technology in place which will make it operationally efficient to carry out the request that's given. So one of the pieces, even within the financial world, so right to be forgotten, is about understanding where's this information and then being able to delete just that information which is appropriate. So GDPR is also in some way conflicts with other regulations. So you can ask for all your details to be forgotten, but if you've transacted with them, then they have to keep it for a different regulations purpose. So again, understanding the context in which you hold the information, how you hold it, is so important.
Third-party providers will be done through APIs, which allows parties to recognize themselves, a little bit like the DLT does, but also to access payments, payment accounts in a very secure way. So we're really looking forward to see APIs created everywhere in Europe, and short-term or medium-term see all these APIs becoming interoperable at European level, exactly the way we did it for cards. We had different domestic card schemes and we made them interoperable with Maestro. This is the objective of the banking industry in the coming 5 years, is to make all of this work at European level. It could take 5 years, it could take 7 years, no one knows, but that's the objective.
On the next episode of Fintech Finance, we catch up with Nationwide Metro Bank in Pitney Bowes to talk a little bit about the customer experience.